I hope you are doing well in these extraordinary times. Welcome to the Fintech Finance Virtual Arena where we're hosting you today. Today, we're going to be talking about that power pink glow, Ziglu. Joining me today is Mark, CEO and founder of Ziglu. How are you doing today, Mark? Whereabouts in the world are you?
I'm doing great, thank you very much. I'm in London in our office in One Poultry. I'm the only person here because everyone else is working from home, as they have been since March. I sent everyone home the week before Boris did. I think he's a week or two behind everyone at the moment. But yeah, we've been working from home for a while. But I'm in today because I'm flying off on holiday for a few days tomorrow. So I'm in London, close to the airport.
Brilliant, excellent. And also joining me is CEO of GPS, Jo Dewar. Jo, how are you today? Whereabouts in the world are you?
Yeah, it's funny how we start the conversations with "Where are you?" these days, don't we? Yeah, I'm at home in Essex. I've through the lockdown period, one of the things that I've done is a loft conversion. So I've now finally created my own study. So I've got my little den at home.
Yeah, I thought it looked different to what I've normally seen before in Zoom calls and stuff.
Yeah, bit more organised and really expecting that this is a little bit more permanent now, as opposed to what we were all thinking a few months back in terms of just being a sort of shorter term activity. Certainly, I don't see for our teams that we will ever be going back to fixed desks in the way that we were, and that's what the surveys with the teams are saying too.
I think Bank of America, their CEO said, and I love this expression, the toothpaste is out of the tube, which is, in terms of home working, I think it's going to be the norm.
Yeah, I've described it as similar to the suffragette movement during the First World War, as in, people have proven through their KPIs and OKRs that they've been performing perfectly successfully from home. So why should they have to go back to work at work 5 days a week?
Absolutely. Well, let's get straight into it, because we are talking about the UK. Why, first of all, just to put it out there, even with the lockdowns that we're experiencing at the moment, again, a week or two, Boris seems to be behind. Why is the UK such a hotbed for neobank talent and competition among the neobanks? Mark, with your background, obviously with Starling, did you want to go first?
Yeah, happy to. Yeah, well, it is true. I genuinely believe we are in the world the best place to be launching anything in terms of fintech, and there's a number of reasons. One is obviously regulation over here. The FCA and the PRA really do support innovation in the fintech marketplace and support good businesses going through a licensing process. It's damn hard nowadays, I can assure you, to get your licensing, because there's not only there's a whole banking license process, there's an e-money license process, but there's also now a whole crypto licensing process. But the right businesses come through that and they help you, and the whole environment is there to try to make sure there's a lot of competition in the marketplace. I mean, you're not going to cross the road to go from Barclays to Lloyds because they're as bad as each other. Therefore, they wanted more innovation, and with the likes of Atom and Tandem and Starling and Monzo and Revolut and Ziglu and many others, of course, there's a lot more competition in the marketplace than there ever has been. So that's helped. But also, the general environment in terms of investment is been great over here. So there's people who want to invest in these types of businesses. The whole EIS environment over here, which has been something that a number of governments have supported, and makes it easier to raise finance in this country than perhaps in other countries as well. And then you've got the smart talent that not only are no finance and banking here in the city. There's loads of those, of course, but also I think technology and universities over here are giving us good people who technically are strong as well. So it's like the perfect storm in a good way of the environment over here compared to maybe California, which is very tech centric, of course, fantastically tech centric, of course, but not so much on the finance side, and New York somewhere in between.
Yeah. So I compare it to the Industrial Revolution, where the huge benefit that London had was the co-location of the supportive regulator, the access to finance for investment, and the tech talent, all in the same city in the same time frame. So, spurred by the global financial crisis and the rise of the the smartphone app. I mean, those things were global, but then London had those three factors all in the same city at the same time, which is what spawned the Challenger Bank revolution, really coming out of London and spreading across the world.
Absolutely, but it's not. It's still not the easiest place to come along, because there is a lot of competition, and competition obviously breeds innovation. Sometimes things get left to the wayside. What are the challenges for these ones? Because we've seen the likes of Loot, Bow, N26 all kind of pull out or close down within the UK.
Yeah, I'd love to answer that one. So there's different reasons why both Bow and Nationwide have been unsuccessful, and I would say it, but they've come from a culture of a big organisation behind them. You've got to get the culture right, and the culture of getting stuff done and not having to cover your ass with going to a committee all the way up to get agreement means that that the challenger banks and neobanks over here that have been born from a culture of technology and innovation are far more successful. We built Ziglu for about 3 or 4 million to start with, and Starling was not much more. They spent 100 million in these big banks, and bought someone else's IT and still couldn't do it. So that they've just, culturally you've got to get it right as well as the technology, and they've got those things wrong. N26 withdrew because competition's too strong over here. Citing reasons of Brexit, but clearly it was just like there's Monzo, there's Starling, there's Atom, there's Tandem, there's Open North. It's just too hard over here. But they're still over in California, of course, and making a presence over there. But it is it's good that there's competition. It's good for everyone that there's competition. That means there's a market to be had, and it means that we're on the right track in terms of providing a great service. But I think this is a great market. If you can survive and flourish in this market, then you're doing something right.
Yeah, no, absolutely agree. I think actually in each of those three cases, there was different reasons as to why they no longer exist. RBS Bow, there was nothing wrong with the product. It was a political situation, because that was known to be Mark Bailey's baby. That pet, it's his project. With Loot, I think what Ollie had done with Loot was fantastic, and in terms of product and design, it was a great product. The key is with all of these fintechs, they need to have a very clear path to profitability, and working with the student market is hard to really make that work in terms of really knowing where you're actually going to make the revenue.
That's a very good point around the revenue, because it does seem that it's build it, get as many customers as possible, and then we'll try and figure out a way to get revenue, to get to profitability. With that in mind, how can the neobanks and these challengers, how can they differentiate themselves from the incumbents, not just from the product but also from streams of revenue? For example, Jo, I know you do a lot of work with the guys at Curve, and they've got some different ways they're looking at revenue. So what should some of these challenges really be doing?
I think there's lots of different paths to revenue. There's obviously always a focus on account primacy, in terms of that account becoming the account that your wages go into and you use for all of your services, as opposed to the pocket money account or everyday spend. There has been a huge focus on that, and that's one of the main reasons that the incumbents kind of sit back and think, well, actually, we've got no real threat, because we have still got that primacy. But actually, it's the neobanks that are getting to know the customers, because it's through the understanding of the daily spends that you actually get the profile of knowing what the customers are like and what they're likely to like in other areas as well. So one of the things that I think that the neobanks are going to make a lot of is actually that data and understanding the customer, and then being able to react and respond to that. There are lots of different sort of paths of revenue stream being explored Interchange was the original that is being curtailed in different ways. FX, clearly, you're seeing the squeeze on margin there. Others moving into sort of savings, insurance, mortgages, other products like that. There's all sorts of different avenues that different people are trying out, and there is no one size fits all in that regard.
Absolutely. Mark, did you want to weigh in on that in terms of streams for revenue?
Yeah. So it's been almost like, I used the expression perfect storm earlier on in a positive way. This is like a negative way. If you look at the accounts of Starling, Monzo, Revolut, which were out in the last sort of 2 months or so, you can see from that they've all struggled with this environment this year. Having to down round to raise money was Monzo's situation because of the lack of profits coming through. They've got very low cash rates, so current account switching rates at Monzo are lower than most. They're sort of the mistress account, as it's called, in many ways. So the expression, not my expression, but sort of what Jo was talking about in terms of they haven't always got primacy, which means that if you haven't got primacy, you're not seeing the wages go in, you're not seeing standing orders and direct debits going out, so you can't understand the ability to repay. Therefore, you might have a credit score, but you don't know what to lend that person because you don't know what they can afford. Therefore, you naturally go conservative because banks do. Therefore, you can't lend as much money. Therefore, you can't get as much interest revenue. And they've had that problem whereby they've not been lending as much as they wanted to. And any available cash they have got is sitting with the Bank of England in short-dated gilts and treasury bonds, earning no interest at the moment because we're at all-time lowest level in terms of interest. And the customer base is divided into two sectors really. Those that have been like Jo at home and probably saving money on travel and not going into work and buying sandwiches and stuff every day and saving that money and doing loft conversions and not borrowing from their bank necessarily. Are good debts that aren't being repaid, that aren't being charged interest on. And then the other side of it is the bad debt side, those that have lost their jobs or have been furloughed, have struggled, and therefore you've got bad debt. So you've got the perfect storm in many ways of the people you want to lend to not wanting to borrow, not needing to borrow, others having bad debts. People aren't using their debit cards, so interchange rebate is lower than ever, 54% at its peak. I think Jo told me some time ago in terms of how it was down, no FX. And then low interest rates, so a really bad environment for banks this year. So the fundamental point that people are learning from this is, look, there needs to be profitability in sight in the business models of all these banks. So I'd like to think that we have that innately within our model. And when I was putting together the RBP, the Regulatory Business Plan, along with the founders of Starling, we thought it was going to be profitable in a number of years because of a range of factors. And those range of factors have changed. The environment has changed, economics have changed, and you need to have enough cash to be able to put to Bank of England for capital adequacy, and that means you can't lend it out. And there's a whole problem that they had this year. But I think one of the things I would say is, I think the challenger banks have proven that there's very much a desire from the demographic that we aimed at, the 25 to 45 demographic, to have an account that puts you first and helps you manage your money. So the saving, the letting you know where you've spent it, what you've spent it on, and do you want to round up, do you want to save that bit, you could go overdrawn unless you do this. That sort of that positive relationship that you now have with your Monzo or your Starling or whatever is so much better than it was with your original bank. So therefore people have used them, and I think to Jo's point in many ways, people will start to use them more, and there will be a shift whereby the challengers become the incumbents, and the incumbents see there's a thin end of the wedge in many ways, or I think so anyway, whereby they can see people moving into the new banks moving into the SME marketplace. And all of them are doing it now. They're taking off a kid's account, they're doing the SME lending, and people can see, my God, what does that leave the traditional banks with? Well, investment banking and large corporate banking in many ways. So you can see them being left to that, and then they've got a massive great branch network. They've got all the mainframe systems. They're dealing with all the cash, and they've got all that high cost base. So it's going to be a problem for the incumbents in a few years' time, I see.
Yeah, no, I totally agree with that. I mean, the piece that we haven't mentioned in terms of revenue is ultimately if the customers see that the product's good enough, than they'll actually pay for the product itself. It's become so much part of their lives in money management that they're happy to pay, you know, the £2 a month, £5 a month, because that's what you know, they recognise the service that they're getting for that product. I think that's the cleanest way of making money from each account. I think what's the big danger, to add to Mark's last point about the ultimate future of the incumbent banks, is even if consumers still see that their money is safest in a savings bank, you know, in an incumbent bank, they actually become, with open banking, they become sort of a commodity at the bottom that can be switched. And the customer, the consumer or SME doesn't actually have a relationship with that organization. It's just a commodity at the bottom.
Yeah,
that's the dumb pipes.
That's a fundamental point. It does mean, unless they respond to the user experience element, the UI, the UX as we call it, then they will be left as the Openreach of tomorrow, because your relationship isn't with Openreach, it's with BT or Virgin or wherever it is. And ultimately, unless you provide good customer service and have a positive relationship with your customers, that is your demise.
Well, I want to talk a little bit about you guys. I want to talk a little bit about Ziglu. I signed up earlier today for my Ziglu account.
How was it?
I've got my card.
Oh, you've got one of the big ones. Yeah, we're struggling to find terminals that accept those, I must admit.
I mean, the contactless is great. Aside from obviously the massive, right? You don't actually get a massive card with Ziglu, but what is it that sets Ziglu apart, Mark?
Okay, well, yeah. What we're trying to do is it's, you know, the challenges, you know, we refer to them as modern banks, but they were 5 years ago we did all those banks, of course, and a lot's changed in 5 years. We still have a problem with FX, and now we've got this challenge whereby it's still quite difficult to buy, sell, hold, send and spend cryptocurrency. And people, you know, I don't have to have a conversation anymore. I used to, but you know, it's 2020 now, or the end of it. So therefore, I'm no longer having conversations trying to convince people it's going mainstream, because people can see it's going mainstream now with you know, governments and with major banking companies, and you know, Facebook's been around for ages, you know, saying they want to get into it. So we know it's happening, and people want to find a way of, look, how do I just buy £50 worth, £100 worth, and hold it alongside my traditional currency? And if I wanted to, it was always difficult then to use it like a currency. It's called cryptocurrency, but in reality, it's so damn difficult to use it like a currency. So we allow people, you know, through their card provided by Jo's company, to be able to, you know, spend that anywhere in the world where MasterCard's accepted, you know, to simply tap it and you can spend your cryptocurrency as well. So, you know, the differences are, I guess, look, we're a modern financial services challenger that does crypto as well, because, you know that's what a modern financial services company needs to do, of course. In addition to that, we pride ourselves on providing absolutely first-class customer service, really good, you know, insurance on the product, so you're insured up to £50,000 for any cryptocurrency that you have with us. I think that's the only company in the world that does that, and give you the best price across your crypto as well. So the simplicity, everything, all the great things you get from the challenger that you love, but you get cryptocurrency, insurance, and best price crypto as well, and instantly be able to sell it and use it to purchase stuff as well. So, you know, we think that sets us apart some way from competition right now, but there's a whole raft of stuff that we're going to be doing over the next sort of 3, 4, 5 months before and after Christmas that will materially move us up and set us apart from anyone else in the world, we believe.
Brilliant.
Yeah, Mark's really part of the next generation of challenging the challengers, and where we were saying at the beginning of this conversation that, you know, the whole neobank race kicked off in the UK, and therefore we collectively as a country, as an industry, have got more experience here than elsewhere. What we've got now is the likes of Mark, who, you know, I've known for more years than I care to admit, but you know, he's built the experience from Starling and from elsewhere, and bringing that sort of knowledge in to do a startup again, taking all those lessons learnt. And then, you know, when you're building all those lessons learned into a new offering, you will by definition benefit, because you know, there's lots of things we all learn along the way, and you build a long list of, well, if I was to do this again, then
yeah, lots of things, yeah, I wouldn't do again, and a few things I've done again because they worked, hence GPS. So it is a case of that once you've got a sort of formula of partners and ways of working, you can get it done for, so far we've raised in seed round and in pre-series A about 9 million, and we've got enough runway to take us through well into the end of next year now. And you think, you hear some of the numbers that have been spent on some of the other challenges. It's ridiculous, really. So, once you know how to do it, and what we've done now is far more complicated than the other challenges in many ways. We've not just built a cloud-based banking platform. We've integrated to multiple different providers of cryptocurrency, multiple different providers of FX, together with all the other ecosystems of cards and payments and AML and KYC and banks, etc. So it's quite complex. That's the reason why it took us 18 months or so, well, a year to get to market, let's say, to pilot. But we believe owning your own IT, or I believe anyway, owning your own IT is actually fundamental to the success of what we are and what we do, because that allows you to have a low unit cost. And if I want to get stuff out, my development team, I'm looking around the office, there's no one here, they're all at home. Normally they'd be around here. They're on a Zoom link anyway. We have a catch up every single morning, 9:30 in the morning, and you can go through where you are with the backlog and development roadmap, and you can redirect based upon conditions and what you need to do. Because we did change, we pivoted at the beginning of part of this year, because there we were in sort of March, April time, realising there's a period of time here where people aren't going to be travelling. So why don't we push back cards a little bit? And Jo knows this, we pushed back cards a little bit, but brought forward some of the features on crypto a little bit more, because that's what people wanted to use. And then people weren't using the cards, they weren't using FX, we pushed that further back in terms of the roadmap. So that allowed us to be able to get something to market. Now, if you're a traditional bank, you've got long waterfall projects, you're less able to do that.
It's worth highlighting one of the differentiators for Mark and Ziglu is the amount of the tech stack that they've built themselves, which is which really gives them that ownership and control.
I was under the impression that you can literally just, I've read enough white papers now that you can go out and just buy a bank in a box. Is it not as simple as that?
Well, there are companies that give you a head start to do that, and I'm not saying that's not the right thing to do for some companies, but we're a tech company first and foremost, with an FCA license to allow us to be able to do current account services and also do crypto as well. Others may feel that they can't build that and therefore go to a provider to say, look, can you give us a head start doing that? Now, the cost of doing that is you might get to market in some cases a little bit quicker actually, but you still got to integrate to all the different systems to be able to provide cards and payments and KYC and AML. But you're paying for all of those every single time you use a third party to be your banking ledger. You're paying for somebody else that, and therefore when I'm raising money as Ziglu, people know they're investing in the core of what we are is designed and built and owned by us. All our APIs integrate to our banking ledger in real time. So whether you're spending money in Australia on a Ziglu Mastercard, processed by GPS, or you're making a payment, or you're onboarding somewhere in Scotland, that all goes through to our banking ledger in real time. We're controlling that, all the events and all the transactions around that, and it's ours. We've done it. So therefore, if we want to change it and evolve it, and we want to have interest rates, charge interest on people going overdrawn, if we want to offer an overdraft product, or we want to provide credit interest, we can program that in and do tiered interest rates up and tiered interest rates down. But we control that. We can get that to market in weeks. We don't have to go to a third party to say, can you do this for us? And if you look at some of the other banks who decided not to do it themselves, and I think there's only 4 in the world that have done it themselves: Starling and Monzo, Revolut and ourselves have built their own banking platform from scratch. You look at what happened in the early days of Oak North, Atom, Tandem, they're sitting on someone else's IT. And someone will be even re-platforming off someone else's IT to someone else's IT. They're left with that incumbent problem of managing change, and they move therefore more slowly, and it costs them more money.
Yeah, no, totally agree. I mean, there's there's nothing wrong with bank in a box or banking as a service providers. In fact, many of them also use us as a platform, so they're good customers. But ultimately, for the end brand, it depends what they're wanting to be. There are a number of brands who are not in financial services themselves. They've got a set of consumers. They've got an app, they've built loyalty, they're then wanting to move into financial services as a way of enabling those end customers to be able to do something with that built up stored value. And for those kind of players, going to a banking as a service provider makes total sense. It's never something they're going to develop the deep expertise in. But if your business is financial services, it is providing a neobank, going to the one-stop shop or the banking as a service providers, it can be great as in terms of a quick getting up to speed, but then it can be limiting in where you can go. And what we see is, all of our customers are on some form of journey. What they do, what they want to launch with, what they want to start with is not necessarily where they're ultimately wanting to be, whether it's global expansion, whether it's building into other sort of service portfolio. And actually, the more that you own and you have control of, the more you can control your own destiny. The piece that makes our piece, the card processing piece, quite unique is that it's very sort of deep and the requirements are quite sophisticated in themselves, and there's a constant need to upgrade to keep pace with both the scheme requirements where Visa and MasterCard keep creating upgrades for all good reasons in terms of new fields here, new chargeback mechanisms, 3D secure, all these kind of things. And you have to have serious scale to actually make that work in any way other than using a third party. Absolutely.
Well, with that in mind, so obviously JP Morgan Chase is going to be entering the neobank market early next year. Is that realistic, and what are they going to do? I imagine, I don't know the guys who are doing that, but I'd imagine it'd be plugging into some nice legacy on-prem developed architecture.
I sincerely hope so, yeah. Well, yeah, I mean, if they do or they don't, it's JPMC, and they'll offer the services that they think are appropriate. I'm not too worried. I don't think Starling or Monzo or any of the banks over here will be too worried about someone coming over here. I think what we do in London and the UK is a shining example of anywhere in the world in terms of innovation and fintech. And if someone wants to try and provide a bit of competition, then good luck to them.
I think one of the things that all of the challenger banks as a community can be sort of collectively proud of is that we are raising the bar of expectation that is driving change and improvement in the incumbent banks. Ultimately, that becomes to the benefit of the consumer. So, we're all winners. I don't think that they will negate the need or the space for us as a fintech challenger community, because I think we are continuing to evolve at pace. And one of the things that the incumbents across the board struggle with is that agility and need to continually evolve. We all smiled to ourselves at the point that Barclays, I think Barclays or Barclaycard, had the big poster campaign say, you can now freeze and unfreeze your cards. It's like, well, we've been doing that for 6 or 7 years.
Yeah.
But ultimately,
I remember we came up with that at Starling Bank in the very early days, and they had an advert on a bus about someone sitting there and doing their card, and I thought, we did that years ago at Starling. Yeah.
But that's a good thing. So I saw a great thing on Twitter, which simply said, the big banks aren't the enemy. The enemy is mediocrity, and that's what competition does. It drives forward these kind of ways of thinking.
Yeah, and I think Jo made a really good point there. If I'm honest with you, and it's something that the regulators wanted to achieve, which is competition in the marketplace, because they perceive there was a degree of arguably arrogance even in terms of the way that some of the high street banks have behaved. And even now, there's arguably a cartel in terms of the interest rates they charge if you go overdrawn, and it's just not fair on consumers. But if you look at the interest rates charged by the challengers, they're moderated based upon trying to do the right thing by customers. Now, the more competition in there, the better it is for consumers all the time, and it frustrates me to death. I worked in Barclays for over 10 years, 12 plus years, and it frustrates me the attitude of some of the incumbents in terms of putting everybody in front of the customer, whereas all we think about all the time is a modern challenger trying to compete in this marketplace is how do we provide a great experience for customers, and they're the people we're trying to drive innovation for, to give them a great product, or they won't come to us. They download us one click at a time from App Store or Google Play. So we have to be compelling, we have to be good. We haven't got the benefit of billions of pounds worth of profits born out of investment banking and corporate banking to sort of subsidise the retail market. We have to effectively, provide a great service and a compelling service to bring customers in. So, that's what the EBA, the European Banking Authority, wanted to achieve in terms of the legislative changes in 2013 when they enabled this sort of fast pass banking license and enabled fintechs to compete more readily, and it's worked. There's far more innovation, far more competition nowadays, and customers come first, certainly whereas the challengers are concerned anyway.
I want to explore the bit around cryptocurrency a little bit further, especially within this pandemic, because people aren't going on holidays, people aren't eating out at restaurants as much. Do you think that people of a certain kind of demographic are throwing down their money into cryptocurrencies and being a bit more brazen with it?
So, well, they are, yeah. You can see the numbers. We see the numbers every day. So they are. But so there's a whole macroeconomic, a situation whereby, trillions of pounds are going into quantitative easing every day, dumbing down interest rates, dumbing down the value of the currency. Therefore, where do you put your money if you've got some money to put it in? Well, gold or it would appear cryptocurrency. So the volumes going through exchanges and ourselves are higher than they've ever been. But the window of price is narrowed, so it's not the silly peaks we used to see 3 or 4 years ago. It's in a very very narrower band now. It's Bitcoin is sort of I was on a call the other day about Bitcoin being the gold of cryptocurrency, and the perception that it is a safe place to put your money, and people genuinely are putting their money into cryptocurrency now because they see it as a bit of a safe haven. Now, I'm not an evangelist on cryptocurrency. All I'm doing as a founder of a company that does banking and crypto is providing a service to people because they've asked for it and they want it, and I want to try and provide something that doesn't rip them off and gives an opportunity to simply buy, sell, hold, send and spend, and you can't do that anywhere else. So putting that focus on customer, that focus on giving a customer what they want. There's no point starting another challenger bank if it doesn't meet a need when you've got such great challenges as we've got at the moment. So what we've done is try and provide something that people genuinely want. And yeah, we can see it's happening. People are spending money on and investing in cryptocurrency, whether they consider it investment or consider it just a case of, I just want to see how it works, because I've heard a lot about it and I've not actually found an easy way of getting involved in it. So for all those reasons, I think it will continue to do well.
And I think in a world where we're moving towards negative interest rates, then that leads people to be, less fearful of spreading their wealth and putting something into crypto, because why not? Yeah. And I think for me, Ziglu's created a platform where I've been playing with crypto for the first time. So it's a safe place, or partly because I know Mark and I know the team, but it's a place where I can just sort of chop and change and play and take an interest, and it's great for many people.
Well, if I'm honest with you, if I can just sort of interject there, because that's exactly what we want to try to achieve. Just make it a safe environment. You've got a safeguarding accounts. We've got an EMI. We've got crypto insurance, and we want to make it really simple and straightforward. So you can buy £10 or £10,000, and it's really simple and straightforward. You can hold it alongside your fiat currency and spend it if you need to. And there's 99% of people in the world who haven't got simple access to it because it's so damn difficult in so many other ways. And we wanted to make it simple and straightforward and let people have a play and learn about it before they decided what they wanted to do and if they wanted to buy more.
Excellent, very, very well said. Well, guys, thank you so much for taking the time to speak with us today. Jo, where is the best place to reach out to yourself?
So I'm at globalprocessing.com or find me on LinkedIn, Jo Dewar.
No TikTok account.
No, that's my kids with all the movements.
I couldn't. I looked at it. I was like, I don't understand this. Mark, how about yourself and Ziglu?
Well, no TikTok for me. I think we've done something on TikTok because some of our demographic do TikTok. My kids love it. But they're only limited to 15 minutes a day on TikTok. But yeah, obviously on the web, LinkedIn, Twitter, Instagram, Facebook, apparently we are. So you can get us anywhere. Yeah.
Awesome. Thank you very much, guys.